What's going on, guys? So we're going to take a little quick look at Square. So Square had earnings, good earnings here. Initial reaction on the stock is good. One thing that I do want to keep in mind for everyone is that look at everything else, guys. Look at everything else that blew out earnings. AMD, they sold them off. Um, Microsoft's earnings have been sold. Um, I mean, everybody. Tesla's earnings were sold. Google's earnings were sold. Yes, the initial Apple's earnings were sold. The initial movement here is it's up. It's green. Everyone's happy. Yes, they blew it out of the park. Yes, they had good earnings. Yes, it was a beat. Yes, they year over year processing is higher. Yes, yes, and yes. Does that mean the stock is going higher? It's yet to tell, right? Here's the thing that I want you guys to think about. This is a bear market, okay? If you have not traded a bear market, this is a bear market. Good earnings are going to get sold. Bad earnings are going to get sold. Good earnings are going to get bought up. 3 days later, they're going to get sold. A bear market is, dead cat bounce. Everyone's happy. Rug pull. Okay. It's going to be consolidation, choppiness. I'm pulling my hair out. Rug pull. It's going to be big green day for no apparent reason, followed by choppiness, rug pull. This is a bear market. Welcome to bear market country, guys. I am not a bear. I am a day trader. I trade long, I trade short. Doesn't matter to me which direction that the market is moving. I just need the market to move. Now, for investors or long-term swing traders, this is going to be tough waters to kind of navigate. Why? Because you're going to have to, it's going to require you to be a little bit more proactive on these long accounts. So what does that mean? What that means is you're going to need to start hedging your position when things do run up higher. Let's say, for example, your average dollar cost on Square is $92 and we open tomorrow at 105 and Square puts in a three or 4 point day tomorrow. Maybe you take some contracts or even one contract and you hedge yourself short going into the weekend by taking some SPY puts or some triple Q puts. Well, you may be thinking to yourself, why would I do that if my position's up? Why am I going to bet against my position? It's called a hedge, because if and when they pull the market, you will make money on that hedge while still holding on to your shares. If we look back at where options came from, now I know there's a lot of options traders out there who solely scalp options, day trade options, swing trade options, but options were originally designed to be used as a hedge. It is a hedge against your position. It is a hedge against the market. Use them to your advantage if you are holding positions long, and especially if your position is higher. If your position is higher, you're going to want to, for example, tomorrow, if Square takes out these earnings highs of around 103.36, and let's say we close at 105, do yourself a favor and take a contract of the puts of triple Q puts. Now, if those positions open up red and the market continues to surge higher, you can close those positions while making money on your investment that you have. Or if we have some sort of pop and then slow fade and those drift into the money, then you can benefit while still holding on to your shares, but at least you're being proactive and doing something about managing your position. So for all of you long-term investors right now is the time to get very do a lot of due diligence on the stock that you're holding and manage your money accordingly. It does nobody no good, including yourself, to sit on your hands and watch these stocks continue to bleed and continue to bleed. It does yourself no good to see good earnings, get excited for one day, to have 3 days later the rug be pulled on you again. So I marked out the highs here of 108.41. Let's see on the daily chart where they took us to. Where they took us to is the 20-day moving average and the linear regression supply zone, and rejected. Guys, 1, 2, 3, 4, 5, 6, 7 days here of sideways consolidation before we lost the lows today, and they put us right back at the top of the range. Now, this can completely shoot up tomorrow to a price of, let's see if I can get zoomed in a little closer, to a price of around 111, 112, even 113, and get rejected. Square does not get out of its own way until it starts to reclaim 118, 119, which is the 50-day moving average. When it starts to reclaim the 50-day moving average and starts to build levels on top of that is when you can say, hey, maybe this is the bottom. Maybe this was the bottom down here at $82. Maybe this was our higher low here. Maybe this is our higher low here. We've reclaimed the 50-day moving average, and maybe our new higher low is around 119, 120. Maybe our new higher low is around 140. And then next thing you know, you're going to be looking back 12 months from now and saying, hey, you know what? That really was the bottom down here at 82. And we've just been putting in constant higher lows. But that's how you're going to have to manage this position. Now, it doesn't mean to just go loading up on the boat because we had good earnings here and then, you know, kind of bust into the 115 zone, trickle around sideways, and then lose the lower lows here of around $93 and come all the way back to 82. And now be wondering what the heck to do. Be proactive, manage your position accordingly, guys. Play the intraday levels. If you guys need help with technical analysis, join my Discord. That link is down in the description box below. If you guys are looking to add another tool to your tool belt and learning how to day trade options, especially the first 1 to 2 hours of the market open, the first video down in the description box below is a 30-minute training guide on one of my strategies that I use day in and day out. Definitely check it out, give it a watch, and I'll see you guys on the next one.